Anyway, so next we have the company, the ride-sharing giant in China, which is Didi, is filing for an IPO or initial public offering in the United States. Now, obviously, a company does that to generate more valuation, more value, more investors, more capital, so that a company could grow significantly. That's always the best bet. So, if you're interested in investing in the company, then they're expecting to generate as much as a valuation of in the north of $100 billion here. Now, for those who are not familiar, Didi Choosing, I don't know if it's pronounced correctly, is a ride-sharing company uh, that is under the legal name Xiaoju Kuaishi. I hope I'm pronouncing it. So it's a Beijing-based company here. So they're under the symbol of Didi, whether they're going to be listed in under NASDAQ or even in the New York Stock Exchange. So what's interesting here, the company has been doing tremendously in terms of the first 3 months of this year alone has generated or doubled their revenue compared to previous year in the sum of $6.4 billion. And despite that, they were only able to eke out a profit of 30 million, meaning in terms of high cost maybe, and obviously compared with making investments in their businesses and so forth. Now, what's interesting here, the company here has a active user of almost 500 million. So meaning obviously targeting a big market in China, it's going to generate a lot of revenue here. But they're spread in 15 countries worldwide. But 90% of their revenue is from China itself. So they heavily rely in their domestic market here. Now, obviously, going to the IPO route is obviously to be able to gain traction in other regions to compete with the likes of Grab and Uber and in other regions. Actually, was it Grab or Uber? I forgot it. Earlier, before, I think it was Grab. Let me see here. Is it Grab? Grab. Yeah, I forgot which one. I think it's Uber. Yeah, it's Uber. Now I remember. Okay, so actually before it was Uber who was competing with the company Didi, but eventually they were pushed out by the company. Obviously, the government has incentives to protect the local businesses and less incentives to help foreign businesses to establish in China. Anyway, so they were able to, I won't say monopolize, but technically it's but what's interesting here, when Uber left, they bought shares with the Didi company here, so they have a stake in the company itself. So if they do well, they would earn a substantial return. Anyway, so obviously the fund here is their focus on increasing their international market, as I mentioned, and then another part of their capital that they're going to generate is to invest in technologies ranging from autonomous driving to electric vehicles. Now, I'm more so in favor of investing in autonomous vehicles to expedite technology, obviously making the car more safe, but it's still years and decades away. Just take a look at where Tesla is right now. Even if they're pushing for autopilot feature, it's only auto assess. It's not fully autonomous. So, but investing in the technology is tremendous. On the downside is, you have to deal with, obviously you're removing the human aspect of, being able to drive the vehicle. So being a driver, a gig economy like this one, will not last long in a sense. So question is, there are always pros with better technology and cons, meaning, a lot of people out of a job, especially in the taxi service and so forth. But still, the company, which is owned or founded by Mr. Cheng Wei, which was founded way back in 2012, which is a former Alibaba executive here. So what's interesting here is the founder, Mr. Cheng, only owns 7% of the company, while SoftBank, which is a Japanese company, who invested in the company has the largest largest stake of 21.5%. And then you have Uber, who has almost 13% stake, and Tencent, the company, has 6.8%. What's interesting that SoftBank is heavily investing in a lot of technologies in different companies, right? Obviously, in Japan, they're very apprehensive in terms of what they call this, of immigrants in their country, right? They prefer to have a homogeneous nation and so forth. So they rely more on technology rather than on people, because their population is already aging quickly and they need to replenish that. So they're heavily reliant on technology. But my question, who's going to manage those machines eventually? You still need people, right? But to each his own. So we'll see how it pans out for those countries, even for those companies. Anyway, so the concern here is obviously when you're trying to create an IPO for any company, is there's going to be increased competition, more scrutiny in your performances. Obviously, becoming a publicly listed company, not just domestically but also foreign. But obviously, this gives credence that they're prioritizing local companies to do well, whether you're Alibaba, Tencent, or in this case, even Didi here. So obviously, onwards and upwards, trying to move forward here.